Thank you for joining us today. My name is John Sluice with Entrust CPA. Today we're talking politics. You know, I don't normally go into politics because we know where things can get decisively, right? But we're going to furlough into it today. For those of you that are looking for some juicy gossip or some conclusion and definitive responses, you're not going to get in this video. But what you are going to get are some pointers to what we're seeing and what to think about. You're surprise, you're going to hear me talk about some tax planning, but then you're also going to give me I'm going to give you some resources on where you can go if you really want to dive into some of these things as it relates to politics. Well, it's no surprise to any of you that taxes and politics are on the media's front page on a regular basis these days. Rightfully so. I personally have never seen two more decisive and separate on the polar opposites, two individuals with a tax policy and a tax plan between Harris and between Trump. So again, Trump Republican, Harris Democrat. What we're seeing is just the extreme opposites. Now, I'm going to take a moment here and say what we're seeing. I say that what we're seeing is it changes. We're using past voting experience. We're using past things that they've done or that they've hinted to. We're using some of the campaign promises, which may or may not result in actual coming to fruition. But what we are seeing is an overall feeling of what's coming up, of what their general strategy is and their tax positions are for each of the individual candidates as well as their respective parties. And it has never been so far apart. The very quick version, Harris is poised to increase in almost all fronts for high earners, and we can change what the definition of high earners is, and that will change under her versus Biden. She does have some things for low income, some renters, and some working families, but by and large, it's going to impact business owners, individuals, and almost across the board increases. Trump and Trump's policy is looking to make permanent the items that were passed in 2018 back when he was president. And so we do have a better feeling of what Trump would do or what it would be like under his presidency, because he likely would be just solidifying what he's already done, and then Harris would be putting significant changes in place. Now, before I get too far, I'm going to point towards some outside resources here, and I'm going to point to them again at the end. But if you're looking for nonpartisan overviews of this, one of the ones that we use here on a regular basis and I have come to like it's taxfoundation.org. I have found it's nonpartisan, and they go through and on a weekly basis update some of the things that have been said or spoken about and the implications that relate to it. And it gives you an idea if you're really looking to see what are some of the things that they're talking about at a much more detailed level. If you want to, you subscribe to a weekly newsletter. It's called Above the Line. They go through that, and they do it more than just the federal. They do it also for all the different Republicans, the state laws, and otherwise. So it is kind of an interesting and fun thing, for me at least, resource to go to if you're really into understanding what are some of these ramifications. Now, the other thing I'm going to mention here, and I say this before going into some of these details here, is that regardless of who wins, proactive planning is crucial. Even if the planning is to do nothing, need to think through what you're going to do, because one thing I can tell you definitively is there is going to be an election in New York in November. So there will be an election. What the results are, we don't know. You're going to note that the president doesn't change until January of next year. And so we're going to have to make a plan of what is going to be the result of the known election. Okay? And I say that because the election's in the end of November. And so what you don't want to be doing is making tax moves or financial moves as a result of an election. So let's say you're voting for Trump and Harris is elected. You don't want to be making a move in December based on that. Likewise, if you're voting for Harris and you think Trump wins, you don't want to be making a move in response to that without planning for it, because we know there will be an election. And so there may be tax moves that you want to make, but we want to think about those ahead, because while we don't know the outcome, we know that there's going to be an event, right? So make a plan of what's going to happen if the Republicans win and if the Democrats win. And again, that plan may be do nothing. So don't hear from me saying that you have to change things. Don't hear from me saying that you have to jump up and down and sell things, buy things, add things, take away things, but at least know. I'm also telling you, though, there is a chance that we are going to suggest things because they are so extreme. They are polarized opposites. Again, if what Harris is looking to propose based on historical voting and based on what they've promised, the tax rates would go for the highest earners from 37% to 39.6%. The corporate tax rate, if she had the proposal, would be from the current 21% to 35%. The inheritance tax, the step up in basis, is poised to go away. Capital gains she has proposed to make as ordinary income, again, for higher net earners. And here again, when I say higher net earners, Harris has separated, or historically shown the propensity to separate even from what Biden had done, which was say that, okay, a high net earner is someone making more than $400,000. So if you make less than $400,000, you're going to have lower taxes. More than $400,000, you're going to have higher. Harris has actually come out and said that that $400,000 is actually higher than she would prefer, and so she would actually potentially even have a lower threshold on that. So Harris would be looking to do clean energy tax credits related to renters and for working families is where they're going to see the benefit of what her policy would be, and it's the high earners would see an increase overall. A few of the side newer taxes that have been proposed, and again, these are just in discussions, in debates and others, would be a financial transactions. So every time there's a financial fee or transaction, there would be a fee or a tax related to it. There's also been proposed climate fees. So if you're not carbon neutral, if you're using carbon-based fuels versus renewable energy fuels, there would be a tax inside of those. Again, she's proposed, or that political side has proposed the elimination of the capital gains at it would be pushing it to the ordinary rates, again, for the high net earners. And so there is a lot of pushing towards increasing taxes for the higher net earners. Now, the opposite side of that is you've got Trump and the Republicans who are pushing for the extreme opposite end of that, from going to the extreme high on taxes to the extreme low on taxes. This is definitely not a year where they're pushing for the middle of the ground. Trump is looking to maintain and keep permanent the lowest corporate tax rate, which is currently 21%, maintaining and keeping the 15% capital gain rate, and then making permanent some of the items that were passed in the 2018 tax law, which would be the individual rates at a lower bracket and a spread out bracket. It would be keeping the increased standard deduction and some of the other items like QBID that were also passed through. And so those, again, we're going to have a little bit clearer visibility into that because we pretty much know what he was pushing before. And so it would be just a repeat and a solidifying potentially of what he wanted or what they was pushing for back when he was president before. Again, I'm going to stress here, there is going to be a lot of back and forths. And you're going to hear the media and the news, and they're going to present items. Continue to look at like either the taxfoundation.org. We can go through and do some scenarios of what will be there and some potentials. But what you need to be doing is, regardless of where it ends, is doing some tax planning. Can't hit that hard enough, because if you hear, ask yourself, if you hear that the Democrats win versus if you hear the Republicans are going to win, are you going to do something different? And if the answer to that is yes, that you think you're going to, then we should be talking. And because I can either walk through those strategies and say, what are the implications of this, even though we don't know for sure, but we can say what we think it would be. And that way you can be poised to think about what you're going to do in 2020, at the end of 2024. Now, I say this because it's important to note that on almost all occasions, the tax law will change. If it does change, will change in 25, not 24. There's always the potential to go retroactively. However, the new president doesn't come into place until January of 2025. And so in order to change something at that point, it can happen, but it takes a lot to go retroactive at that point. So generally what would happen is if there are any changes, it's going to be on a proactive basis and a prospective basis in 25. And so again, what I would see happening is that we're making moves in 24 in the event of something happening in an election, so that way we have something that occurred in 24 versus in 25. Again, the hypothetical would be here is if Harris is elected and you are saying and afraid that the rates are going to go up in 25, you might make a transaction in 24, and so it solidifies it in 24 before any changes, even though you may not know what those changes are. Again, I'm not proposing we do that. I'm not proposing that we do or we don't do that. What I'm proposing is that we make a plan for your specific reaction of what you think you're going to be, and to talk through what those are going to be, because nothing good happens without a plan, right? So don't think and don't do knee-jerk reactions, and don't try to do things like sell your business in the last month of the year. Not going to happen, right? And so we want to think through those transactions before you do it, and at least consider what are the tax ramifications of those. Thank you for joining. I look forward to talking through this with you, as much as it can be decisive and as much as we may or may not have an opinion on this. But the purpose of this video is to get you thinking about how does it relate to you specifically, and to make sure that you know that we should be doing tax planning, we should be making some moves or not making moves, but if we do it, that we want to be in a plan and stick to that plan. Thank you for joining, and look forward to talking.